What's good, everybody? It's your boy TBT, aka the Brainless Trader, and we're back with another video. Now, I noticed one of my videos has been going up recently. I was at 2K like 2 weeks ago. Now we're at 8K. I want to say thank y'all to all the subscribers, everybody who's been liking the videos, commenting. I love all of y'all, and keep them coming. Like, let me know what y'all want me to talk about. Let me know what y'all are interested in learning about, and I will cover the video. I noticed that in that video, it was just a straight up trade breakdown. So today what we're going to do is give y'all a straight up trade breakdown. Just want to draw your attention to some of the PD arrays that can probably help you in your trading, that have been helping me. And these are the ones that I'm really going to be paying attention to, especially this fall as the market starts to even out and we start to get a little bit more trading opportunities in the market. All right, so let's go ahead and hop into it. I've kind of marked some of these up, and if you watch Hannah Forex. If you watch Hannah Forex, you pay attention to one of her recent videos, and not the most recent one. I think the one before the most recent one. She talked about this trade right here. It's a GBP USD trade, and I'm going to break it down for y'all as far as what I saw. She saw similar, exactly, kind of. We're trading the same setup, but I'm going to tell you some of the things that I feel like, from my standpoint, what I was looking at when I traded it. So boom, let's look at it. So we're on the 15-minute chart. Now we already know the higher time frame buys these last couple weeks have been bearish, right? So understanding that the higher time frame buys has been bearish, just meaning that the market has been trending down, right? We know that we're looking for trades that are going to seek out sell side liquidity, right? So let's take out all this stuff off my chart just to get down to the nitty-gritty of what we're looking at, right? This price range right here. ICT likes to break things down by looking at a most recent high and most recent low. If we break it down and look at a most recent high and most recent low, we look at this area. Goodness, let's hide all of this. Right? This fib area above 50% is the area that if we are in a downtrend, that's a premium, right? That's a premium, meaning that is a setup for sales, right? It's a opportunity for traders to get into the market looking for sales, right? So right off the bat, we have most recent high, most recent low. We see price retracing back up into this range. We're looking for opportunities to sell once price gets above that 50% line, right? So boom, just from a basic standpoint, we already know where we're supposed to be looking in the market, correct? All right, now we know that we have a liquidity run here. As price is traded up, it's breached buy side liquidity here, buy side liquidity here, and darn near buy side liquidity here. It would have been really nice if it got these relative equal highs right here, but it kind of equaled it, right? And so after this, say for instance, if it's August 17th, 2 a.m., you're looking not for buys here after it's breached buy side liquidity. We're automatically looking for sells. And if you look at any of the other videos that I have out on YouTube, sometimes I talk about the 4 steps that I use to get into trades, right? I'm looking for, first and foremost, a run on liquidity, a run on buy stops or sell stops, right? So this would be liquidity. We're looking at relative equal highs or lows. Now if we're bearish, we're looking at relative equal highs for the liquidity that we're looking for price to purge before we decide to enter into trades over on this side of the market, right? So what we have is a run on liquidity, and then from there we're looking for trades that can send us into the bearish direction. Now Hannah Forex looked at one of these trades, basically looking at the fair value gap over here, and so I'm going to kind of break it down for y'all in a little bit different way. Same kind of idea. We're looking, for sells, we're looking for fair value gaps, but a little bit different breakdown, right? We're looking in this area. So we've got a run on liquidity, higher time frame run on liquidity, right? I've got an order block here. I wouldn't have traded this. I'm paying attention to this here. We're majorly bearish. We have another small run on liquidity here. So you're seeing the same type of trend, run on liquidity, then price continues bearish. Now, we have what's called a Trendline Phantom. And what a Trendline Phantom is, if you're learning from ICT and you're looking at these new videos that he's posting, you're going to learn about a Trendline Phantom. Essentially, what a Trendline Phantom is when a trend line, the retail idea of a trend line, is ran. So if you traded retail before, if you traded support and resistance trend lines, you know that half the time when you traded, based off of this trend line, it would hit one times, maybe twice, go up a little bit, 15, 20 pips, and then boom, all of a sudden it's running right back down. So you're looking at it like, wow, I thought the trend line was going to hold, and instead it broke, retested the trend line, and went the opposite direction. Well, here is exactly that, except now we're prepared for it because it's something that ICT teaches and that we're looking for, right? So let's just break down all the things that I have on the chart. The trend line is just a basic trend line. Now, we're looking for price to breach that trend line, basically to break it, right? Now, paying attention to where our order blocks are. If we're looking at the highest up close candle, that's this one, highest up close candle, I've got the 50% consequential encroachment, the midpoint of that up close candle. Look at what price does. Finishes right linear to that midpoint of the highest up close candle. So that's an order block. Boom. Now we know that price is respecting and going to give us that bearish look. Now, what are we really looking for? We have the opportunity to look for either breakers or mitigation blocks. Usually I like to look for breaker blocks because they're a little bit stronger in terms of their validity in the market. But right here we have a lower time frame mitigation block. So I say 5-minute mitigation block. A mitigation block essentially is a high, a low, and a lower high. Whereas a breaker is a high, a low, and a higher high for looking bearish, right? So high, low, lower high, the lowest down closed candle of this high, low, lower high is a mitigation block. We would then be looking for what? We're looking for price to trade aggressively, not only through the Trendline Phantom, but also through the mitigation block to form a fair value gap. Boom. Let's go to the 5-minute chart and let's see what that looks like, because it's a 5-minute chart mitigation block that I have here that crossed the Trendline Phantom after the breach on liquidity, after the run on liquidity. And so you see I have it tabulated here. This particular fair value gap coupled with this order blocking now, because we were looking originally at the highest up close, and now as we continue to trend down, we're just looking at the order blocks that are forming as price is trending down. So you can continue to look at, okay, what's the most recent highest up close candle? Okay, that would be this one. Technically that's an order block. So then you get order block, fair value gap. That's the 2022 mentorship setup, right? Now I've added the Trendline Phantom, price trading through the trend line, and also the mitigation block. What does price do? Trades back into all those areas all at the same time. The mitigation block trades back into this area. The mitigation block trades back into the fair value gap. And what does it do right afterwards? Runs away. This is an entry. Right here, you see this, especially once you see this large candle, or even this bullish candle, or seemingly bullish candle, go up, retest that same area, retest what is the next most recent order block, right? The most recent highest up close candle here, retesting it and continuing down. Any of these candles is an entry, bearish entry to where? Where are we targeting, TBT? We're targeting either a fair value gap or we're targeting a most recent low, right? I got my finish line here. Look what price did. Came, touched the target, went back up. Now let's talk about this zone here that I have tabulated. A lot of times ICT talks about looking at recent areas of accumulation on the opposite side of the market that you're targeting, right? So we're targeting not the opposite side you're targeting, but the opposite side of the market that price is trading towards, I guess. So liquidity is here. You're looking for recent areas of accumulation that after price trades past, it may trade back into. Look at this. This would have been, if we were looking bullish, this would have been a bullish order block. But now, as the market trades past it, it turns into an area of accumulation that price will possibly respect. Look how it respects it. Doesn't trade past this area. I'm talking about these two down close candles. That's what I've got. The bodies of those candles highlighted as price trades one time into it, twice, three times, and what else? Continues down bearish. So that's just a short example of an easy setup that you can get into the market and that can allow you to have multiple confluences. I gave you the Trendline Phantom, I gave you the mitigation block, then I gave you the ICT 2022 mentorship setup, the order block, fair value gap. All of that, right? You're looking at all of that within the higher time frame buys, which is the most important part. That alone, looking for setups similar to this, right, can get you bread in the market this fall. All right.